Welcome back to your stocks. Just look at this market. It's moving around. We were holding high with a gain of around 70-75 points. We were really rejoicing that. We have given up 50 points in no time. Pull up Bank of Baroda. Just take a look at that stock. It was holding comfortably in the green. Now it's moved into the red. BPCL as well should be up for you on the screen. Now that stock as well was holding with good gains. That as well has fallen off the cliff. But the very fact that we have fallen from the high point of the day, it has to be a big heavyweight. Pull up HDFC. I think that stock could have caused some part of this fall because the Bank Nifty as well has given up close to around 50 points quickly. So HDFC is down. HDFC Bank as well should come up for you on the screen. That stock as well has seen selling pressure. And Kotak Mahindra Bank, that I think was holding mildly in the green. Currently, that stock in fact is sitting with a cut of around 1.5%. It's moved to the low point of the day. So this market just moving around, far from conviction buying is what we're seeing today. Tata Steel as well should be up for you on the screen. One point of time it was high by 4%. That stock as well has given up a goodish bit. And L&T. Now that's another heavyweight stock, so that could have swung it around a bit. L&T as well has lost 0.6% just in the last 10 minutes. Take a look at that. That final dip is what we are seeing, and that's why the Nifty has given up close to around 50 points from the top. The Bank Nifty as well. Currently it's bounced back, but it was holding high with a gain of close to around 300 points. Now in fact it's higher by close to around 230 points. That's the bit of a dip that we saw. But let's get to our callers. We have Nirav Joshi who calls us from Gujarat. He has a personal finance query. Hi Nirav.
Yes, speaking. Hi.
Hi Nirav, can we help you?
Yes, I am a 38 years old engineer working in power plant.
Okay.
I have two daughters. Older one is 10 years old and younger one is 5 years old.
All right.
I have made some investment in SIPs. I am paying 30,000 per month in various SIPs.
Okay.
Which is rank 1, 2, 3 by CC in large cap, mid cap, small cap, and some special sectors also. I just want to know that whether this investment is sufficient for education also my daughter, both daughters, and also for their marriage. Or should I invest more?
All right, Nirav, good to see you looking forward to taking care of your little girls as well going ahead. But 30,000 rupees is what you're investing in mutual funds. Could you name those mutual funds out for us? And I believe your time horizon is 15 years. We have with us in the studio our expert Feroze, so he'll help you out with the query. But if you could give us the names of these mutual funds.
Yes, Axis Equity. Hello.
Yes, go ahead.
Sundaram Select Mid Cap Fund, Axis Equity Fund,
okay.
ICICI Prudential Value Discovery Fund,
okay.
DSP BlackRock, SPI Blue Chip Fund, Kotak 50.
All right.
There are various funds. 15 to 20.
Okay.
There are total around 15 to 20 schemes, and I am paying 1,000 per month in all SIPs. All the SIPs are ranked by CRISIL 1, 2, and 3.
All right. Feroze, over to you.
Yes, Nirav, there are quite a few things which need to be taken care of here. Firstly, I don't think you should have more than 6-7 schemes. 6-7 schemes can actually look at whatever size and actually address the portfolio's need. So consolidate your portfolio. That's very, very important. That's when you will be able to see the power of compounding, and actually fewer schemes are far easier to monitor, and I don't think there's a necessity of any more than 7 schemes. Point number 1. Point number 2, you also mentioned that you have sector-based schemes for your child's education and child's marriage, for example. That's a 10-15 year goal, like you've specified, 15 years. I don't think you should have any thematic funds or sectorial funds because they take more risk. Over long periods of time, the return converges to large cap and mid cap funds. So that's point number 2. Point number 3, 30,000 rupees per month. If you have 2 girls, I don't think it will be sufficient for both the more important objectives of education and their marriage. So I think you have to scale it up. The best way to scale it up, which we recommend to retail investors or investors who want to accumulate over monthly installments, is to scale up 10% every year as your disposable incomes go up. So 30,000 will not be sufficient because inflation on education is over the last 20-25 years has been upwards of 10%. So you would be surprised on the inflation in the next 10-15 years as well. So please keep scaling up your investments at 10%. The schemes seem okay, but consolidating them would be the better idea to my mind. And if you don't have Birla Frontline in your portfolio, add that. And ICICI Prudential Focus Blue Chip is a better blue chip fund than an SBI Blue Chip, which you just mentioned.
All right, up next, Sunil Kumar Rajpa writes to us from Kolkata. He says he wants to invest about 1,000 rupees per month in mutual funds and only for a time horizon of 4 years. So what's intriguing here is that he's just 26 years old, and I wonder why he's chosen this time horizon of just about 4 years, which seems too short for someone his age. But nevertheless, perhaps he has a life goal that's coming up at 30. So if I guess this would mean just one fund, right?
Yes, I think 1,000 rupees if you want to put money in for 4 years, and looking at your age, if you have to bring in some degree of excitement into the portfolio, then you should look at a mid-cap fund. I think after these small corrections which over the last 1 week we've seen, I think from a long-term perspective, at least 3 years plus, mid-cap schemes will actually have a larger propensity to bounce back. So I think look at an ICICI Value Discovery Fund, which is a very good mid-cap scheme, well diversified, good stock pickings. Shankaran the CIO has done a brilliant job in terms of picking up the right stocks, so go for it. And 1,000 rupees should just be one scheme. Don't further split it into two schemes is what my recommendation would be.
All right, Feroze, valid advice coming in there, but there's some news flashing here on the screen. In fact, US FDA has issued an import alert for Dabur's Alwar unit, and that stock in fact has taken a bit of a knock. It's down close to around 2%. If you can pull up the intraday chart, you'll see that that stock has taken a bit of a hit on the back of that. But on the flip side, pull up Omara Raja, Sonia tells us that that stock has moved to the high point of the day, and it's made a fresh lifetime high, so watch out for that stock. And she mentions in this kind of a market it's making fresh highs. But slip in a short, we come back, answer all your queries. Welcome back. As we speak, the Nifty in fact has regained all that lost ground, and ICICI Bank, that's a key contributor. The Nifty has moved higher. It's holding with a gain of around 60 points. But take a look at the Bank Nifty. Now that's moved higher. It's holding with a gain of around 300 points approximately. It's all because of ICICI Bank. You pull up a contribution chart as well, you'll see that ICICI Bank would be contributing substantially to today's up move. It's higher by close to around 4.9% approximately. It's moving to the day's high, so maybe there's some short covering as well that's playing out on that stock, and that's why the Nifty has moved higher. GAIL as well has recovered from the low point of the day, but I think pulling up the contribution chart really will give you a good idea of what exactly ICICI Bank has done, both for the Nifty as well as for the Bank Nifty as we speak, holding steady with a gain of close to around 70 points. And as I suspected, ICICI Bank single-handedly pulling the Nifty higher by 22 points. Reliance Industries as well putting its hand in there, in fact helping the Nifty to go up by close to around 10 points. But let's get back to answering your queries. We have Tejasvi Patil who calls us from Bangalore. He wants to invest in the stock market. Hi, good afternoon.
Hello.
Hi, Tejasvi, good afternoon. How can we help you?
Sir, actually, I am not a regular trader, but I have invested in few of the stocks.
All right.
Okay, I want to do like monthly, I want to put some amount, like around
Correct.
between 2,000 to 5,000.
2,500. Okay.
Yeah, per month. So, like, I just want to know what the current scenario, which stocks I should invest.
All right. Feroze, he wants to invest around 2 to around 5,000. Do you suggest some sort of plan for him?
Yeah, if you want to actually invest 2 to 5,000 rupees, 2 to 3,000 rupees, I think you should look at mutual funds, since you said that you're not a specific trader. Yeah. So look at mutual funds. In the mutual fund category, take one large cap, one mid cap, and then diversify the portfolio into these two. In the large cap category, look at an ICICI Focus Blue Chip. In the mid cap category, you can look at a Religare mid and small cap scheme. These two schemes, I think, will actually diversify your money in greater than 150 odd stocks, which will bring down volatility, especially in these times, significantly, and especially when you're doing a systematic investment plan. That's another method of actually easing the volatility. Very contemporary. Go with these two schemes. I think they will help you even out the whole movements in the market.
All right, on that note, Feroze, Mayuresh, thanks very much for joining in and for advising all our viewers. We need to wrap up on your stocks, but do stay tuned. Closing bell is up next.
CNBC TV18, celebrating 15 years of leadership.